Hello, this is Alex Kazmark for the FXEdge.com, and this is your free daily Forex video for October 6, 2009. Quick reminder before I begin, the purpose of this free daily video is education and not an alert service. I'm not going to make any trade recommendations, but what I am going to do is point out levels of support and resistance for the next 12 to 24 hours. Please keep in mind that trading with leverage is very risky, so please don't trade any real money until you've established a proven track record of success on a demo account. Trading conditions are always changing, so make sure to watch tomorrow's video to stay updated. Well, folks, I think we still have a lot of questions that remain unanswered as the market continues to consolidate. Economic data is still taking center stage as we and many other traders are looking for guidance. We started questioning if economic data over the next year will be mixed and not provide much guidance. Economies may linger near these levels for a prolonged period of time, and at this point we can only speculate where the market will go. There's no clear sign of direction, so we advise patience. We're going to go ahead and cover the support and resistance levels for the next 12 to 24 hours. First up, we have the euro dollar, currently trading at 146.48. Market again has been consolidating. If we look at the Fibonacci retracement from the recent top at 148.50 to the most recent bottom, we can see that we are now near that 50% retracement level, and perhaps if we break above that 147.26 level, perhaps 147.40, then we may see continuation of euro strength. Perhaps we might find some support here for the dollar, and perhaps the euro is going to run into resistance near this 50% retracement level and bounce back. The dollar may bounce back and continue gaining strength following the recent level of resistance here for the euro. So as I mentioned, first level we're going to look at is 146.80. That's the first level of resistance for the euro dollar. Above that, we're going to look at 147.40, 148, and 148.50. The euro could find support at that 146.20 level, followed by 145.60. Below 145.60, we'll look for 145.20, 145, and 144.80 as the third, fourth, and fifth level of resistance. Next up, we have the pound dollar. Now, the pound dollar hasn't done much over the last few days. It's been up and down over the last few sessions. Again, more so consolidating. So what we're going to look to do here is we're going to look for either a break below the recent low or a break higher above the recent high as far as guidance is concerned. Support and resistance levels currently trading at 159.37. First level of support for the pound could be found at 158, followed by 155 and 153.30. We mentioned over the last few days that this 158 level is going to be a major area of support for the pound. So we really have to break and close below that level to see further dollar gains. Above 159.38, we're going to see first level of resistance at 160. Above 160, we'll have 160.50, 161.50, and 162, and finally 163.50. Third currency, we have the dollar Swissy, currently trading at 103.20. We had drawn this 103.21 area of support or resistance over the last few weeks, and it's going to be major here, I think, in the next coming weeks. This 103.20 level. At this time, this is exactly where the price is. So we'll see how this area is going to act as a support or resistance for the day. But as of now, it's right at 103.20. First area of resistance for the dollar is going to be at 103.80, followed by 104.50. Above that, we'll have 105.50 and 106.50. Dollar is going to find support at 102.40, followed by 102 and 101.30. If we see a break below the 102 level and perhaps a close, then momentum is going to shift in favor of the Swissy. At this time, if we take a look at the Fibonacci retracement level, we'll see very similar pattern as we saw in the dollar-euro, or excuse me, the euro-dollar. 50% retracement level is where the market is now. We're going to hope to see a bounce off that level and perhaps a close above 104.50 as a sign that the market is going to continue favoring the dollar. Finally, we're going to take a look at the dollar-yen. Now, this is an interesting pair, as you can see, it has had problems breaking below the 89.50 level specifically closing below that level. So this 89.50 level, so we're going to take this 85.50 level. We're not going to talk about this as a first level of support for the dollar, but first level is going to be found at 88.20. Below 88.20, we'll see 87.12. And below 87.12, as we've mentioned over the last few days, we won't really talk about any levels of support. 85 level comes to mind, but we really want to see a break below this 88.20 level, and perhaps a close below the 88.50 level in order to see further dollar losses, and then we'll talk about the 85 level. Our first level of support once again is at this 88.20 level. Now this 89.50 level is most likely the recent level of support, except we need to see what happens over the next few days. As long as the price remains near this level, we're going to ignore it for now. But this is again a pretty significant level. As you can see over the last week or so, it has had problems closing below the 89.50 level. First area of resistance for the dollar is going to be found at 90.20, followed by 90.80, 91.60, 92, and 92.50. If you'd like a more detailed analysis with potential trade opportunities, please join us in the members section. This has been Alex Kaczmarek for the FXEdge.com free daily Forex video for October 6th, 2009. Until tomorrow, good luck trading.